Good morning, everybody. Thanks for joining. Just give us a couple of minutes, please. Just wait for a few more of the attendees to join, and we'll make a start in about 1 minute's time. Thank you. Okay, look, I think we'll make a start. Thank you again, all, for taking the time. For those I have not met, my name's Greg Taylor, Head of Equities at Solder Brothers, and I'm here today to talk about Solder Brothers Emerging Companies Limited, a listed investment company on the ASX under the code of SB2. How we'll handle today's, I'll give a 15 to 20 minute presentation of the fund and a couple of new developments. Then we'll open the forum up to questions, which you can type in the Q&A box there. And in the event that we're unable to get to all those questions, also within this presentation at the end, you've got my contact details where you can reach out, and feel free to contact me directly with any questions. Okay, so I think we got, yes, this presentation has been released to the ASX this morning, and so there you can find a copy there, and you've got the details of the disclaimer, etc. The intention today is to give a little bit of an update on the recent performance. We've been able to update the November monthly performance, so it'll be good to be able to share that with you. But what we've been doing this webinar series is, just taking through investors through different elements of the fund and the decision-making process. And a common question we often get is around the unlisted holdings within SB2. So today's sort of central topic is going to be talking a little bit about those unlisted holdings, our capabilities in that space, and taking you through some case studies and updates. Again, this is a slide you may have seen before, but for those new to the call, just a bit of an overview. Solder Brothers is a global fund manager with over $4 billion of group assets under management. So that's spread across the alternative assets, including property, credit, and equities. And said myself, Greg Taylor, head up the equities business. And Solder Brothers Emerging Companies Limited, which is the ASX listed SB2, is the listed investment company dedicated to investing in small cap Australian companies with a market capitalisation of under 500 million. Pleasing thing is the performance continues to be strong. Over a 3-year track record now, coming on 3.5-year track record in the fund. And pleased to report had another strong month in the month of November, with an 8% increase over that period, taking the 12-month performance to an absolute return of 44%, which is, the team's very pleased about. The dynamic we often talk about, and I'll touch on a little bit in a little bit more detail, is around the discount that SB2 trades to its underlying post-tax net tangible asset value. The SB2 share price has been improving. There was a time when we started this webinar, it was down at 53 cents, and I think this morning it's at 76 cents. So it has started to improve, but it's really continuing to track the underlying performance of the fund. And the discount still, as at November, end of November, is still at 34%. What that means is you can get this diversified, well-performing portfolio of investments at a significant discount to the underlying asset value of those holdings. And the vast majority of those holdings are cash and listed equities, so that that net tangible asset value is very real. And what I'll talk about today is that there is circa 14% of the fund in unlisted investments, but hopefully what you'll take away from today's presentation is that these are very conservatively valued within that NTA value, and there's significant upside that sits within those. My proposition to you today is that the real asset value of the portfolio is even higher than what we state here, if you think of the underlying strength and momentum of some of these unlisted holdings. But we'll get into that. And then, a dynamic which is really starting to play out now. Again, I was sort of quite vocal in the first half of the year about this real arbitrage between small cap and large cap equities in Australia, and the valuation difference being at 20-year extremes, and often a really unique time in the cycle to invest. What you're starting to see the early signs of that performance, and the small cap market has added about 20% over the last 12 months, which is good, but still trading at a significant discount to its large cap peers. And in my view, really well set up for a very positive calendar year 25. Sorry, I'm just having a bit of trouble here with the. Let me. So I'm going to have to go to this view because we were having some troubles with the movement of the pages. Again, apologies. So just touching on the recent performance. So again, pleased to report the month of November, the portfolio delivered an 8% positive return, which was really encouraging, especially in the context that the small cap index that we reference was down closer to 1%. So that's close to a 9% outperformance for the month alone of November. Then if you look over some longer periods, over the last quarter, the last 3 months, again the fund's up over 12%, again comfortably outperforming the benchmark. And then if you look at the 12-month numbers, really pleased that the fund's now delivered a 43.65% positive return, which is more than double that of the small cap market. So the active management that we're instilling into this fund is really paying dividends, and it's really rewarding for the team to see that. And then again, it's not what's also pleasing. I was talked about this, the history of the funds well over 3 years, and coming on to 3.5 years, and during that time we've on an annualized basis consistently outperformed the benchmark, and on an absolute basis as well. So really encouraged by that, and again still feeling very optimistic about the year ahead and the ability to continue this strong momentum. A slide that I share with you each month in these webinars is just a bit of a summary of the portfolio, and this kind of goes to my confidence in why I still think there's some significant upside ahead. But just to start with the top five holdings, what's been a good driver of performance is, look, we're a conviction fund. We invest in sort of 20 to 25 names, and in some instances we'll can hold up to 10% in a single position, and we do that off the back of the deep research and analysis that we do, and we are a conviction fund. And what's been pleasing for us over the last 12 months is a number of our key conviction holdings have performed really well. So I've spoke to you at length about AI Media and Alfabs. Again, they've had really strong 3 6 month performance, which is encouraging in this. But there's some new names in that top five as well, which again have they've been positive performers to the portfolio. But again, I'm excited about what they can do in the next 12 months. Blue Bet's, one which we added to the fund earlier this year, and it's up over 30%, but it still looks very attractive on a risk versus reward basis. EML Payments is one which was a real positive contributor to the month of November. It's a portfolio position we've only added in the last couple of months, and we have entered that below 70 cents as an average price, and it had a very strong update off the back of its AGM, and now trading around $1 a share. So, but again, I really feel there's quite a way to go with that story. And then the other one that's sort of popped in and out of the top five, but we've had for probably over 12 months now, that again I really think's well set up for the next 12 months, is Alcidion. It's a healthcare technology business, and they've had a couple of encouraging contract wins over the last couple of months, and we're really backing them to get some more significant contract wins over the next 6 months, especially in the UK market. And I think that could be a real significant driver to a meaningful re-rate for the Alcidion share price over the period through to June. Again, these metrics, despite the fund being up 43%, we do trade the portfolio, and we take some profits and we look for new opportunities that I've just spoken to. And what I'm really pleased is that the underlying metrics of the portfolio are still sort of once in a cycle. I keep talking to this 25-year history that I have in managing small caps, and there's only been 3 times in that 25-year period where I've been able to construct a portfolio where the weighted average upside was greater than 70%. Noted it was above 80% about 6 months ago. It's now above 70%, but still very attractive. And what you're seeing here is a portfolio of 25 plus holdings, which have got average revenue growth approaching 20%. All the key earnings multiples are in single digit, and they're profitable, growing businesses. So really excited about the outlook going forward. I just touch on this discount to NTA. Again, what you see here is the evolution of the share price. The NTA is $1.13 as at the end of November. And at the moment, the share price, as you can find on the ASX, is around 76 cents, 74.5 cents at the end of November. So that's still a 34% discount to the underlying asset value. So, continuing to focus on closing that discount with initiatives such as this marketing. I've been very active out meeting a lot of people and doing a lot of forums around the country. And we had our AGM during November as well, and announced that we're working towards inaugural dividend for the SB2 vehicle to be paid at the half year, which will for the period through to December, which will be announced in February of 2025. So and we've also still got the share buyback in place, which we've been quite active in that, as you're about to see from the ASX announcements as well. So all these measures continuing to drive towards closing that discount down below 10%, which I think is achievable with this consistent process. Just moving on now to, I guess, call it the top focus of the topic today in the presentation is around the unlisted portion of the portfolio. I spoke about it representing 14% of the total fund. And just before I go into a little bit of detail about those underlying holdings, I just thought I'd touch on the capabilities within the Solder Brothers Group and my own personal background in investing in unlisted investments. And we've got a very experienced and large team in the equities department here at Solder Brothers, and we've all had, I've got three members. Said I've got 25 years experience. I've got two other members with 15 plus years experience investing in unlisted investments. So and the manager itself being Solder Brothers, we have five different equity funds and coming on a 10-year record of investing in those funds in this growth equity sector of private equity. So a lot of capability, good track record, and really believe it's within a sub 20% component of the portfolio, a real opportunity to add some meaningful returns for investors. And when I talk about our investment approach, it really is a little bit different to the listed investment. I've spoke at length about the depth of analysis and due diligence we do for all investments, including listed. But once we take an unlisted investment, because it's of a different nature, and you don't have all the disclosure and transparency necessarily that you have with a listed company, we tend to take an active style of management with these investments, which means, taking a meaningful percentage of the company and typically joining the boards of these companies and working with the management teams to make sure we are across all the key issues and adding value over and above our capital. And again, got a long track record of doing that. And my team has, our broader advisor network does, and sat on multiple boards over the last couple of decades and had a lot of success in this space. Another part I'll just call out is that in becoming a lead investor and actively managing these unlisted investments, transaction structuring is critical to what we do. And that's important on a number of fronts. But one of the often the pitfalls of investing in private companies is getting into share structures and shareholder agreements that are not really shareholder friendly or in the favour of the meaningful shareholders. So we do a lot of work around that and make sure that we're very aware and de-risk as much as possible around those risks. And again, we've got quite a proprietary, unique structuring model that we use that's had a lot of success over the last couple of decades. What we're targeting with these unlisted investments is an IRR greater than 30%. So that's effectively it's a annualized return of 30%, and the hold period's typically 3 to 5 years. And so what we're looking for is an absolute return of typically greater than 100% spread over that sort of 3-year period, which is, again, what I'm pleased to report is it's something we have delivered in the past and are confident about our ability to continue to do that. The other relevant topic around unlisted investments is the valuation methodology, and that is what value do, because you don't have a mark to market daily, like a listed company. How do you carry the valuation within the net asset value of the fund? And through years of experience and really focused on having a conservative valuation approach. So what that means is it's very unlikely and rarely that you'll ever see us marking up the value of an investment unless there's been an external catalyst for that markup. So we don't just wake up one month or one quarter and say, oh, we think this business is worth more now, and change the value. What we need for that catalyst is another independent and external investor or transaction occurring in that holding, which enables and sets a new valuation mark. In addition to that process, which has been tried and tested for a long time, is that the valuations are also independently audited on an annual basis, and they're also there's an audit check on a 6-monthly basis and a full audit on an annual basis. So very confident around the carrying values. Now I'll share a little bit more about those. So as I touched on, the unlisted component of the portfolio is, approximately 14% of the fund at the moment, and the top four holdings are listed here. I'll go into detail about the top two holdings, but collectively the top two holdings are greater than 10% of the absolute 14. So over sort of three quarters of the exposures found in the IPSI and Pelican Corp investments, which I'll do a deep dive on for you. And so before I do that, a couple of the others, just to note, there's so what I didn't sort of touch on here, which was a bit remiss of me, it's not as if we're very focused in the unlisted investments that we make and the sectors in which we focus. And what you see here on the left is the sectors we play in. So you've got the fintech sector, again, deep track record and domain knowledge and network in that space. Within the property tech sector, Salter Brothers itself is a large consumer of property technology as the largest owner operator of hotels in the country and a best part of $4 billion property portfolio. And then we also look at sort of more enterprise software as a service businesses, more generally, and very much, again, great track record and network in the sport tech and the telco sectors. So they're the sectors in which we focus. It's not a scattergun approach, and again, that's what you'll see here with the list of holdings. So just quickly touch on number 3 and 4. Sphere's a fintech business that's kind of in this impact investing sort of business that it handles the calculations of CO2 emissions and the ability for consumers to offset those balances and measure their footprint. It has a number of global banking partnerships and has signed up some significant global banks in white labeling their software, which does the calculation and capture of the climate or the carbon footprint that a consumer might be doing through their spending habits. And there's a couple of other institutions that are on that register with us as well. And it's a business we've had for about 2 years now. The other one here is a business that delisted, and we were involved in the delisting of it, but it was previously an ASX listed company called Bike Exchange. The decision was taken to remove that from the ASX and complete the technology build and then look for an exit in 2025. I'm pleased to report that that technology re-platforming is getting close to being finalised and creates a lot of value and opportunity for the business, and very much will move into sort of probably a sale process as we move into the 25 year. Okay, so what I want to do now is move over to the top two holdings and give it a bit more colour on those. The first and the largest holding is a fintech business called IPSI. So this is a business that has a long history in financial services, but it developed a proprietary software product and platform which was launched in 2020. And what it does is it's a payments platform. Think about for online payments, so for call centers and for e-commerce, or what they call card not present transactions. And it's got some really deep, unique technology in this space, which is, again, encouraging. What was really exciting is we invested in this business just on 2 years ago, and it was still, we're quite opportunistically, to be transparent, at the depths of the market sentiment, but it was close to completing its platform build, and we're really excited about the role it could play in the financial payments ecosystem. And what's really encouraging is that has played out as we had hoped with our thesis, and they've got this dynamic least cost routing solution, which is really topical in financial payments at the moment. You've seen a number of the ASX listed companies being significantly beaten up on their share price as a result of some Reserve Bank regulation or talk of regulation around reducing transaction costs for credit cards in the card present space. And it went as far as the RBA saying that why they're now looking to regulate this is because there's only one company in the country that has proven that you can do dynamic least cost routing for payments in this country, and that one company is IPSI. So extremely valuable and proprietary technology that's been validated by the RBA and validated by some of the customers that you see here on this page. So they count government, big telcos like Vocus, Latitude Financial, HCF. A lot of these companies use our payments platform, and it's a business that was having good growth in FY24. That growth's absolutely accelerated into 25. And we're now breaking through profitability. And again, there's a lot of strategic value in the technology and the solution that it does. Not to speak out of school, but since this RBA announcement and validation of what we do and the new customers we've been taking on, there's been a lot of strategic interest in this business. And what that means is companies looking to acquire IPSI. We talk about a 3-year holding period for these investments. We've just completed year 2. And as we move into calendar year 25, we're sort of starting to explore a few of our exit options for this business. What I can say is we made this investment 2 years ago when it was loss-making, hadn't built its technology, completed its technology, nor had proven it with large-scale partners like this. We have not marked up the value of the investment from the same price as the transaction was completed at 2 years ago. The value of this business, without question, is significantly greater than that. How much, time will tell. But again, am I losing sleep about whether the carrying value is there any risk to the downside? It is extremely low. I think the risk is absolutely to the upside. I think what you'll see over 2025 is that valuation potentially being unlocked for the benefit of the shareholders. And in this instance, Solder Brothers controls about 70% of this company, and SB2 would be a major beneficiary in the event that an exit was achieved. But there's no guarantees, but we're in a good spot. The second largest business, is a global sort of infrastructure software business called Pelican Corp. This is actually a business that Solder Brothers has held for over 5 years. And it's a pure software business, gross margins north of 80%, now does over $30 million of global revenues, growing at double digits, and has some really sticky and unique IP. And what it actually does is, a lot of you probably would relate to the dial before you dig functionality, where before you as an individual, or more importantly, as a construction company or utility, are looking to dig a meaningful hole, you need to understand what's underneath the ground that is about to be disrupted. And this is the software that keeps all that, and you need to get the approval and maps and everything through the software that runs this. So not only do they do that in Australia and have done for a long time, also in New Zealand, they're a very prominent player in the Northern Hemisphere, in Europe, the UK, and the US. So and again, its profile being a genuine global business, profitable, scale, high growth business that has meaningful further opportunity ahead, places it very well. Again, we've had we haven't been seeking bids for this business. We've had a number of inbound approaches for this business, and as we move into calendar year 2025, we're looking to maybe turn that into more of a formal process. And so we're working towards, I think, it is in my expectation at least, that in the calendar year 2025, you're likely to see some sort of major transaction there, which will validate the valuation of this business. And again, on the valuation, it is held at a very conservative value within our portfolio valuation and NTA. So I think there's, again, no guarantees, but in the event that a transaction was completed in the next 12 months, really confident that'll be at a meaningful uplift to the current value. So that's all. I've taken, the 30 minutes, probably a little bit longer than left a lot of time for Q&A. But hopefully that just gives you a little bit of colour, how the fund's been performing, what we do on the unlisted side, and some of, I guess, call it the potential that sits in that unlisted side. And again, often the question comes, is there a risk in that unlisted? Of course, there's a risk, but in my mind, that the risk is to the upside, and I think you're going to see that potentially being unlocked in the near term. So I will pause there. I'll check in with our facilitator and see if we have any questions. Megan, no questions as yet?
No questions.
Greg, I had a question from somebody messaging me directly. They were wondering if you dispose of, or if you sell some of these unlisted, will you be replacing them, or will you be moving more to a fully listed portfolio?
Yeah, that's a good question. And look, the most likely, so that the mandate of the SB2 and the investment strategy is to have up to 20%. So in unlisted investments, the expectation is the percentage that we have, again, currently at 14, will decrease over time. And maybe the feedback from investors, and I'm happy to get this feedback over the next 3 and 6 months as I'm out visiting you all in person, or because a lot of people have used that as a reason on why, or maybe the NTA is not real. I'm really excited about the prospect of proving how real it is, and maybe then I might be encouraged to keep it at 10 or 15%. But I think, to answer your question, I'd expect it to trend in the event that we got a couple of these exits. I'd expect it to trend below 10%, and maybe even lower.
Thanks, Greg. I don't have any other questions which anybody's messaged me, but maybe just to finish up, again, thank you everybody for joining. I know there's a number of new names that we've met recently that have joined this webinar to hear more from you, Greg. So thank you all for your time. If there are questions, feel free to either message Greg or myself directly, and we can arrange also calls to discuss this. And if people are interested in purchasing, we can obviously assist in facilitating some on-market purchases of the stock if they don't have a means already to acquire them.
All right, thank you, Yossi. You'll see there you've got
Thanks.
the contact details of Yossi and myself. Appreciate everyone's time again, and this will be the last one for the calendar year. We will do another one later in January, where we'll give a review of the 2024 year and an outlook for the 2025 year. So everyone have a safe and enjoyable festive season, and don't hesitate to reach out if you have any questions. Thanks again.